Hey guys, thanks for tuning into my channel. Let's do a little afternoon update. The market just closed, but I figured we could take a look at it a little early. I've been recording another video all day that ought to be out tonight, maybe at 6 or 7 o'clock. I'm excited about it. But anyway, I want to get this update out of the way. Let's look at JEPY. Well, let's start with the charts. Now that is a beautiful sight to see. That's NDX, NASDAQ. Look at that. Boy, this close, right at the end of the day, it was a double, positive, something to look at. Just something to look at when it closed outside of the Bollinger Band, the 1.6 standard deviation Bollinger Band, on the time frame we're looking at, which is 30 minutes. That's powerful. It can be powerful indication. And closing on the highs is powerful indication too. Sure enough, that one played out nicely. Let's look at Russell. This is what IWMY trades. These guys were not able to close outside their Bollinger Band the other day. And that's why I didn't buy IWM options. IWM is like the SPY's version of Russell. But anyway, and I traded. It's for retail people. But if I would have seen something on the Russell, I would have been interested in IWM options. But I wasn't. And it is just hanging out here in the middle. Now, the good news are for people that sell options is, look, it freaking got back into the profit zone. It finished right, it looks like, at the bare minimum. But, I mean, heck, we'll take it. We will take it. That's way better than this morning. Look at this. This is showing unchanged on the day. And I just checked it, and it actually is unchanged on the day. I thought that was wrong, whereas the index was down 0.5 point. That's huge. And how does that happen? Well, that happens because I don't have what the original capture was, but what do you bet it was about 0.5 point? Or maybe, well, I bet it was 60. I bet it was 60, and they caught 11, so that 0.5 point is, I mean, that's the difference, is the option. That's the difference there. On a day like this, where, oh my gosh, this is where it really comes in handy to sell that put. So these guys earned 2 cents a share today. It brings their earnings. They're still negative for the month. They were negative 38 cents the day. They lost 1.8 million. Then they made $1 million the next day. That brought them down to negative 17 cents. And today's small winner, and it hasn't settled officially yet. On Sunday night, we'll have the correct numbers, but pretty much break even. Call it break even. I mean, my goodness, heck of a trade. Heck of a trade. But then if we're just looking at extrinsic, right now they're running at about a rate of $1.85 for a dividend next time. It's only 3 days into the month. All I did was I took this and multiplied by 7, because there's 21 days in the month and we've had 3. So this is the most unsophisticated formula ever. It's backwards looking. It's not forwards looking. It just means that it would pay $1.85 if the next 18 days trade exactly like the past 3 days. And we know that's not going to happen, but it's just fun to look at. So anyway, they've been catching massive extrinsic, to say the least, because option premiums have been jacked. I show this all the time, but before, last week option premiums were 12, 14, 11, 13, 10. And then when the day that the Fed released the notes and Jay Powell gave the press conference, which was the 30th, volatilities went up. And then the volatilities have stayed pretty elevated. I mean, it's come down a little bit from that day, but heck. Anyway, all right. Good job, guys. Nice job, IWMY. Let's check out QQQY. These guys right here. Let's look back over here. These guys, yeah, look how high volatility is now. Now, I'm thinking that's an error. There's no way those option prices are the same back-to-back days. I'm sorry about that. That happens sometimes. Let me look at my work. 155 at 113.18. The good news is it's a higher number. All right. Well, anyway, that's going to adjust the number a little bit. But the good news is, look, these guys captured the whole 1,000,007. So, yeah, they lost 4.4 a few days ago, but they made 1.7 yesterday and 1.7 today. That adds up to 3.4. Call it 3.5 with the change. So, 3.5 less 4.4 is, $900,000. We can deal with it. It's something we can deal with. So onto the extrinsic situation though. They're making money at about a 95% rate based on last month's payout and based on if the next 18 days are the same as the past 3. And like I say, they won't. Just something to look at. Just something to look at. All right, so let's check out old Mr. JEPY. JEPY, I mean, you know, they sold options at the 49.15 levels. They needed at least 49.15 for max profit, and they got 49.58. That's really good. That's a huge difference. That is a huge difference. I just like, look, I'm going to look at this SPX chart one more time. I mean, that's beautiful. And in fact, I remember I said yesterday we'd be at all-time highs. I don't know if we're really at all-time highs, but I meant we would be higher than this high. But I think that's close to all-time highs. I don't know. It doesn't even matter. Who cares? Who cares? I'm not based on any special knowledge other than just watching this every second of the day, you know, since the time I was 20, especially the indexes. I don't follow the individual stocks so much, but NASDAQ and the SPY, or SPX, whatever you want to call it, I know about. All right. Doesn't mean I'm always right. I just have a lot of experience. Jackson, what are you chewing? I think Jackson's chewing up something. All right, so that looks really good. Everything looks really good. I mean, everything looks really good outside of the, you know, the day we had 3 days ago or 2 days ago when all these funds lost big. I hope that's a one-day anomaly and we'll get back to our winning ways. Look how hot JEPY's been. Other than that big loser, look how many winning days before that. And then before that, look how many winning days. And then we had another problem at the first of last month there. We lost 1.1 million in 2 days. You know, I guess we got it over with faster here because we lost 1.5 million in 1 day instead of 1.1 million over 2 days. And really, if you count this 100,000 in with it, you know. But anyway, it was not a good start to the month. Great finish. Let's hope these guys continue their winning ways. I always forget to show you Tress. I haven't updated the spreadsheet yet, and I'll have all that stuff updated by Sunday night. But let's look at old Tress. I have it saved in the option simulator. All right, so let's zoom out so we can get a look at what we're looking at. All right, here's Tress. All right, when they put this trade on, the implied volatility of TLT was like 14. This morning I saw it at 20, or maybe yesterday I saw it at 20. It settled back down to 16. The implied volatility is helping them out. It's helping make this position profitable. Let's see here. Let me look at something here. Let's go back to save trades. Okay, these guys based on, yeah, that's right. Okay, these guys it's showing up about 17,000. I'm going to check all that with the individual prices. But anyway, it was a good day. It started off a whole lot better. Yesterday they had $50,000, $60,000 of profit. But you can't control everything. It's, you know, they're still doing all right. Good job, Tress. This fund is a mystery fund. I can't wait for them to put on their second trade so I can see, are they going to do this kind of trade all the time? This long volatility trade? Or are they going to go back to what I would call more normal stuff where they earn time decay and put the odds in their favor? The odds are not in their favor on this trade. If they did this trade all the time, the fund's NAV would decay, and decay in a bad way. Not just decay because they pay a dividend and it goes down by the amount of the dividend. That's just called NAV depletion. This fund would decay because of the strategy they're using. And they won't keep doing this. They're going to guarantee you next time they're going to switch to a calendar or a diagonal where they sell something in this week or sell something in the near term and then buy something further out. Which is basically what they've done on this trade, but they've sold something in the near term and they've bought 2 things further out. So they turned it into a long volatility. So basically, they've turned it into a synthetic strangle. I would call this a long synthetic strangle is one way you could look at it, a calendarized strangle. All right, guys. Well, I appreciate you guys sticking with me, and it's been an interesting week. Look for this video I have coming out. It is a really good video. I think you guys will like it. All right, guys. Have a great day.